All right. Good afternoon, everyone. It is 12:10 on the afternoon of September 28th, 2021, and today I get to do a positive $188 recap and I only traded DBGI today. I increased my risk on it, and it did not make it easy. um, the momentum strategy that I've used over the past, say, 2.5 years or so, it needs to change. Things are different. I'll go over DBGI first, and then I'll go over the other things that I had on watch this morning. So here we have the 1 minute on DBGI. Let me make this really big and easy to see. And so, the way that I used to trade momentum, here we have a stock that has great news. It's reporting forward guidance of up 350% over, forward revenue guidance is up 350% for the fiscal year 2022 over fiscal year 2021. An estimated 37.5 million to 42.5 million, something like that, in revenues. The stock has a float. The float is 5.43 million shares. Shares outstanding are about 11 million. And now, when something like this used to pop up 2 years ago, when this used to pop up, this thing would squeeze like crazy on news like that, with a small float that it has and so forth. But it did not do that. So here's the open. It opened at $4.77. And it popped up and then it dipped down. And so I was like, okay, here's the dip. So a move past the open is an entry on momentum. So I had an order ready to go at $4.77 per share. And as it went up right here in this third 1 minute candle right here. And so I clicked buy, and I got filled at $4.77 as it came back down through. So I'm like, okay, it popped up and bobbled down. It didn't hold above, but it's okay. It's momentum. I'll give it a minute to resolve. So it did then go up here and make a high of $4.87, 10 cents higher. I was in on 1,000 shares, 10 cents higher than my entry. And I was like, okay, here we go. No problem. And then it just tumbled, right? So I'm like, great. Let me wait this thing out to see if it decides to bottom down here. It hasn't, gone against me over 25%, whatever. So it's kind of like, okay, it's not bad. Although when it made a move here from 477 down to 437, that's 40 cents against me. And that's, it's on 1,000 shares, that's $400. So it's like, all right, it'll come back and it'll make another run for the open. Well, it didn't, obviously, if you can't tell. And so I was sitting here thinking to myself, in watching the level 2 also, so far this thing has traded 66 million shares today, and the level 2 was just crowded, super crowded. There were sellers popping up at the weirdest prices, and like 5,000 and 10,000, and they would just be kind of sitting there, on the ask, and they would just really, really strange. Not the way I'm used to seeing things work at all. The sellers, I'm starting to wonder if there are people out there naked short selling again. Because even though if I were to hit short sale on this, it would have me pay a fee, but that doesn't stop me from selling it short, So, is there ever a time where it's like, well, there are no more shares to sell short? It's like, no, there's a fee to sell these short. So I wonder if there are a lot of people just paying the fee to sell it short in order to beat down the momentum trade. I don't know. But I was looking at this thing. I was like, okay, there's this Fibonacci level here at 407, and 407 corresponded with, where is it? Let me find 407. Yeah, corresponded with the bottom. So let me make this large so it's easy to see. So it's like, okay, 407 down here, support before it fell off the map here, or fell off below. So it's like, okay, 407, there's a coincidence, there's some support there. There's some coincidence there. I like that. There's in 407 kind of corresponds with this area over here. So it's like, okay, I'm going to stagger another 1,000 shares between 407 and 399, which actually turned out to be a really good spot for support at this point during the day, right here. So you can see that 407 was the Fibonacci, and it went down to as low as 398. So between this Fibonacci and this low right here, I got filled on another 1,000 shares. And so I was in at an average of $4.41 per share on 2,000 shares, right? So, okay, and the reason that I took a snapshot of this level 2 again right here, as you can see at 11:09 in the morning, I was in at an average of 4.41 on 2,000 shares. In this 100 at $4.31, this 101,000 share seller didn't hide. I can put my orders in if let's see if it's on here. Close all quantity, where I can put this in. I think it's under conditional orders. I can or special condition. I can put this in as a hidden order. I don't have to show my order publicly. And nobody does, actually. Anybody can, if they want to sell, buy or sell, they can hide their orders at whatever level they want. Usually I don't. I usually don't care too much. In fact, if I do put an order in, I kind of want someone to see my order there so they know, okay, well, there's somebody putting in an order to buy at this level or an order to sell at this level. So, it doesn't really matter to me. But anyway, there are people and there are reasons to hide orders. So here we have this 101,000 share seller at $4.30. Now, another thing that has changed is that traditionally, when you have a gigantic seller like this at $4.30 and it gets pushed through, that seller gets bought up and the price gets pushed through that's a spot to buy. It's like, okay, the majority of the selling is done. Buyers are coming in. This is a spot to buy. It's going to run up from here. Well, what's changed now, and that was at 11:09 in the morning. So let's get over to 11:09 here. Here it is right here. 11:09. So let me minimize that and pull up my tools. I'll mark it off with a marker. So, right here on this candle, at 11:09, you can see the timestamp here is 11:09. This thing, somebody came in that 1 minute time frame, and bought up $400,000 worth of this stock. And normally, what that would mean is that it breaks through and it runs up and it takes off and it doesn't look back at $4.30 again. Well, apparently not anymore. Apparently not in the new world of momentum trading does it just take off after a big seller like that is taken out and start to squeeze up. For whatever reason, and this is the second time I've seen this in recent history, so when a big seller like that is taken out, the price per share dives. Like everybody's like, okay, there are going to be a whole bunch of buyers that come in after 430 is broken, expecting this thing to squeeze, so I'm going to sell into it. Unfortunately, I guess there are a lot of people that can make money that way or something. To me, it seems like there's a lot more money to be made on letting a stock squeeze up. But then again, the market is not designed for traders unless you're a damn good trader or a member of the big boy club. Otherwise, the stock market is designed for investors. The stock market is designed for people to see a company that they evaluate on earnings, revenues, growth, a product that they like, so on and so on. You buy your stock and then you hold it for 5 years, 20 years until you retire, whatever it is. That is what the stock market is designed for. The stock market is not designed, it's designed for liquidity. That's why we have market makers, so that they can come in, they can provide the liquidity, they can provide the shares available for people who want to buy and sell, so that there's always a liquid market. There are always shares available to trade, or there are always shares available to invest in. So if you didn't have market makers, and ultimately if you didn't have traders, you wouldn't have a market that's as liquid as the market is that we have. So there are two things that have changed here. One is momentum for price movement past the open is not there, and this is not the first time that I've seen this. This is quite a few times that I've seen this. And the second is when a big seller gets taken out, that's a signal to sell against, unfortunately. It was a lot easier to make money on momentum only 2 years ago. In fact, it was looking back on it now, I thought it was tough then. I did well over six figures in my first year of trading full time. I've been doing this since roughly 2006, roughly. But my first year of doing it full time, I was trading almost exclusively momentum. And I did extremely well. The game has changed since the momentum game has changed since I started doing it. In fact, the large caps have been behaving with more predictability than the small caps have, which isn't totally abnormal. But after the first year of trading and having so many successful trades in the first year, you can't help but get conditioned. This is one game that you cannot play and be conditioned, though. You definitely have to change with the times. You have to roll with the punches in trading. So here we go. Fortunately for me, I managed to get out of this thing with a little bit better than 7 cents per share profit. After this thing finally, there's another example I have. Let me see if I have it handy real quick. Let's look at my downloads here real quick and see if I can find. There's another instance. Downloads, RNAS, here it is. I took a screenshot of this one too. See back here on, let's see, what day is this? I don't know what day this is. Oh, wait, no, hang on. RNAS, I think it was either the 23rd or the 24th. I don't remember exactly which day it is. It's either the 23rd or the 24th, right? And here, a 722,000 share seller popped up, right? And this is at 1014. And that 722,000 share seller, actually, while I'm at it, I may as well just go back and look at it. RNAZ. Here we go. It's probably on the, it looks like it was the 23rd. Let's go back to the 23rd here. Here's the 23rd. Let's look at it on the 1 minute. And that was at 10:14 in the morning on the 23rd. 23rd, 10:14 in the morning. Here it is right here. Right there. So I'd seen this before, right? And I got shaken off of this trade, if I remember correctly. This wound up being, the 23rd was a $38 green day. And I had one really good trade and then RNAS, right? And so I let go of it, unfortunately, prematurely here. I let go of it early. So it was within this minute at 10:14 in the morning. Here it is. Oh, it's 10:16, sorry. So it was a couple minutes later, right? That this seller at $4.15, let's put 4.15 on there. So a 722,000 share seller at $4.15 was broken at 10:16 in the morning, and then it just tanked. And in my previous history, when a seller like that gets taken out, the sellers are gone. The buyers have come in, the buyers are in control, sellers are gone. The stock is going to squeeze, it's time to move. Well, so unfortunately, I let this thing go. If I remember correctly, I let it go like in this candle right here for something like a $300 or $400 loss. Let's just pull it up here. Yeah, here we go. So I traded 2 SPY contracts for about a $400 gain, and then 1,000 shares of RNAS kicked me down to where I only had a $38 gain on the day. So I was like, okay, that when I saw that was, I don't know if that was the first time I had seen it. Probably wasn't, but I was like, that is just extremely unusual for a stock to break a seller like that. Let's do the math on it. 722, we'll just call it 722 even, times $4.15. So someone came in and bought $3 million worth of stock at $4.15 to take out that gigantic seller, and then the stock tumbles. It doesn't make any sense. And so I was sitting there, I was like, I know that shenanigans. I was watching this thing, and it really kind of chapped my ass too, because the stock came right back up to get back above 415, and then went on to make highs over $5 a share. So if I just held on, and I wasn't, let's see if I have my average price on that image for RNAS. Yeah, I was in at an average of $4.08. So it's not like I was in at a bad average or anything. It was, I'd done a good job of buying the consolidation after this run up right here. So it really chapped me, right? And it's a memory that lasted. So today on DBGI, when it dumped like that, after taking out right here, after taking out a 100,000 share seller at what was it, $4? Let's see, let me pull it up again. Oh, $4.30. Yeah, and it dumped right there. I didn't let myself get shaken out. I was like, I know that these are shenanigans. I know, there are buyers coming in to buy this thing. There are people interested in owning this thing here, and they'll buy it now to hold it for 5 years or 10 years. I imagine what's going on is that there are probably a lot of buyers who got burned on other moves where a stock would go from like $4 to $28. They'd buy 1,000 shares at like $25 just to watch the thing go down to 20, or watch the thing go back down to $6 or $7 a share after investing 25,000 in it, and they're pissed. So I think that is kind of what's going on now. Is there are market makers just jumping all over this stuff. Here, let's pull DBGI back up. I mean, you can see here for a stock to have put in an open at 478, made a high at 487. Let's see, low. Okay, so low is $3.98. The high is $4.87. So roughly $1.90, we'll call it, on a volume. At that point in time, volume was 48 million shares. And as of right now, it's 67 million shares, and back at $4.08 a share. So I think what's going on is either the market makers or somebody's like, hey, we can't have these gigantic momentum trades rolling up like they do anymore, because there are a bunch of investors who are getting really ticked off about, jumping into a stock price that, say $25 a share or whatever, and the next day, it falls back down to 7, 8, 5, whatever. There are a bunch of hodlers who are really, really ticked off. I'm guessing that's what's happening. I don't know. I mean, I couldn't tell you exactly. I don't know. That's just kind of a guess. To fall in line with the market being a trusted place for investors to invest, rather than a place where it's like buyer beware of maniac traders bidding up stocks, 400% in a morning, and then just walking away and forgetting, like the next day with some of those trades that I took, I wouldn't remember what I traded the day before. Sometimes I'll finish the day. It'll be the end of the day, I'm eating dinner. I'm like, what did I trade today? I can't even remember. I can't even remember the symbol, the name or whatever. I'll have to look it up in my trades and be like, oh yeah, that's right. So, okay. So that was a tough trade. And once it popped up here past 441, which was my break-even spot, I put an order in for 443, and I was like, okay, maybe it'll run back to its open. If it can make it to its open, it can make it back, wherever, the past its morning high. If it can make it past its morning high, then it can, start squeezing up to previous levels here, and so on and so on. Wasn't happening. So I dumped it at 4. I pushed the button when it said 450, and I got filled at like 447, and my order was for 443. So, I'm out. I'm happy to be out. Only slightly profitable, and I'm going to have to play momentum differently from now on. Unless something's really getting super squeezy. Otherwise, it's this really weird. I'd expect large caps to grind the way this thing was grinding today. So, all right. SNOA, no real trade there today. I really wasn't paying much attention to anything else anyway. This thing went up pre-market and then sold off. It seems to have gotten the $7 level right here and kind of is like sitting tight. I don't know if that means it's waiting for the next leg of a drop off, or if it's just going to sit tight at $7 a share. I don't know. We'll see. ALF actually I was kind of watching this a little bit, and this gave the cleanest setups. I was like, why didn't I get into ALF instead? I remember thinking. But yeah, there were definitely some clean setups here. Here's the morning. Here's the open at 769, and so it broke it here, came back down a little bit, and then ran. Now, so 769 would have been a good entry, but it would have been a tough trade to hold on to, because you can see here after it broke through again, it dropped back down, and then made its way back up again. When as high as was 795 right there, and then came all the way back down to 769 again, and then took off for the next Fibonacci, close to the next Fibonacci. It did wind up breaking the Fibonacci over here. Kind of a tough trade too, actually. I don't know if I would have gotten shaken off there or not, though. It only dipped down to 753, so it wouldn't have been too bad. Let's see. I have my eye on SBSW. That's just on watch. Let me put that back here behind POAHW or POAHY. So then IMAB, I didn't have a close eye on this one. When I went back to look at it, I was like, oh wow, look, it's about to fill its gap. The news on IMAB is that it was added to the FTSE ESG index. ESG doesn't really excite me very much. I don't really like the ESG philosophy. I'm a value-driven guy, and ESG is, I don't know, it's just so over the top. Value-driven management, Uh, I'm a I'm a complete and total value driven management guy. 100%. ESG kind of takes it to this sort of different level, almost kind of what's the authoritarian kind of thing. I don't know. Anyway, HUN, interesting here. So bounced down this Fibonacci, came back below it. I don't know if I would have really recognized the trade here so much. Yeah, I don't know. Meh. Now, POAHY is pulling back just a little bit. This is Porsche, and Germany is about to go into a good economic situation. So I am looking for opportunities on Porsche for pullbacks. And it looks like it's, right now, this is an outside reversal. So that's actually really bearish. It's possible, it's really quite probable I'll get another pullback here to start buying POHY again. The outside reversal, that's not nice. I don't want to see that. But it doesn't really scare me very much. The next 6 months to 12 months, I think POAHY is going to be a good spot to have money. And then SBSW, I need to dig into SBSW's financials and look at them more closely. I was actually, I don't know if I played this. Actually, I haven't yet. I have not yet played this. This has been on watch a couple times too. Yeah, no, I haven't. If I did play SBSW, I don't remember. This thing is a non-energy minerals company, if I remember correctly. Yeah, non-energy minerals. They're out of South Africa. So I'm guessing precious metals and that kind of thing. The financials on this thing are outstanding. I'm talking like a consistent growth, consistent profitability, high margins. I only took a real quick look at its numbers. Actually, let's look at it real quick. Go to Yahoo Finance. We'll look at SPSW. And the thing, it's taking a beat down right now. Let's look at its statistics first. Okay, trailing PE is only 3. Forward PE is 0.9. That's crazy. Price to sales, 0.84. Price to book, 1.7. Profit margin, 27.58%. Operating margin, 39%. Return on assets, 29. Return on equity, 71.44. I mean, this is incredible. Revenue, $162 billion in revenue, trailing 12 months. Revenue per share, $226 of revenue per share. Shares outstanding, 720 million. Float, 685 million. Held by institutions, 10%. Shares short, 8.61 million. Gross profit, $44.02 billion gross profit. Earnings before interest, taxes, depreciation, and amortization, $72 billion. Net income, $44.76 billion. Earnings per share, $4.19. Quarterly earnings growth, 164%. I've got to go through. I mean, those numbers are phenomenal. Phenomenal. Incredible. I've got to go through and figure out why this thing is getting such a beatdown. I think it has something to do with gold, with the price of gold. Here, let's do I've got to go through here and read, let's see, other expenses. I guess it's income expenses have gone up a little bit. Net non-operating interest income. I mean, you're doing a good job here. Oh, okay, this is This is annually. I mean, this thing's putting up incredible numbers. Let's go back and look at its operating income. Our operating cash flow is 37.2 billion. Levered free cash flow 21.8 billion. I mean, it's incredible. That's just on the face of it, that's just amazing. I'm gonna have to go through the financials and take a closer look. I mean, this thing is just getting a beat down. I mean, I don't get it. There's got to be a bottom to this thing coming soon. I imagine. Let's take a look at the fib. Oh, and actually, look at this. Look at the. Let's see. Let's see. It put in a Head and Shoulders reversal. Did that break it? Let's see, 2040. And the high there is 2041. The high is 2047. So it didn't really put in a Head and Shoulders exactly. It's not the Head and Shoulders that I like. All right. Well, yeah, I've got some more work to do on this one to see what the hell's going on with this stock price. Because it just doesn't seem like it should be taking such a beat down. Here we are at 1209. We're below the 50% Fibonacci on this price action. Let's see what kind of a fight it gave. Yeah, so today it attempted to stay above that Fibonacci today. You can see here it's letting go of it now. Look at that bounce off the Fibonacci there intraday. That would have been a good bounce to buy 1209 to 1220. It's only 20 cents. But yeah, this thing is getting a beat down. Let's see, it's down 5.46 today. Let's see where metals are. Metals, gold. It's only off 0.74%. But I mean, gold is taking a beat down too. And apparently gold will continue taking a beat down as we move into quad 2 in Q4. All right, everybody. That is my recap for the day. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you tomorrow morning for the strategy session. I am out.